Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Good to have you with us here at Auspice. Let's get across what we saw overnight. Global investors continuing to rotate out of tech stocks on the threat posed to software businesses by AI. On Wall Street, the Nasdaq falling 1.5%, with investors selling out of software-related stocks and seeking value elsewhere. The S&P 500 Value Index achieving its fifth consecutive session of gains, while the Growth Index fell around 2.5%. The latest sell-off was triggered by a new legal tool from Anthropic's Claude large language model. Well, Alphabet reported after the bell and revealed it's targeting capital expenditure of between 175 and 185 billion this year as it ramps up investments in the AI race. That figure is well above analysts' estimated capex of 115 billion. Google's Gemini AI assistant app yet exceeded 650 million users per month in November. Advanced Market Devices shares tumbled after the chipmaker forecast quarterly revenue that disappointed investors as it competes against AI heavyweight Nvidia, shares of which also fell. Palantir shares they slumped, reversing sharp gains from the previous session, which were driven by the AI data company's strong quarterly sales, while some software companies added to recent losses, including Snowflake and Datadog. Supermicro Computer shares surged after the company raised its annual revenue forecast on sustained demand for its AI-optimized servers as companies ramp up data center capacity. Shares of drug maker Eli Lilly rallied after the company forecast 2026 profit above Wall Street expectations, while in Europe, Novo Nordisk shares tumbled as the Danish obesity drug giant warned that unprecedented price pressures would lead to a sharp decline in sales and profits this year. And Uber Technologies has backed its capital-intensive autonomous vehicle strategy and is forecasting first quarter profit below expectations while it missed fourth quarter estimates. Well, in the latest US economic data, private sector employment rose by 22,000, which was less than half of economists' projections. Meanwhile, the ISM Services PMI remained steady in expansionary territory, but the employment and new orders components were weaker. In the Eurozone, inflation dipped last month, with most economists expecting it will last for at least a year and keep the European Central Bank on hold with rates. Price growth in the 21-country bloc slipped to its lowest level since September 2024, dropping to 1.7% in January, led by falling energy prices. Well, US Treasury yields were mixed as traders continued to assess the impact that incoming US Fed Chair Kevin Warsh is likely to have on monetary policy. The yield on the two-year note falling to 3.55%, the 10-year at around 4.27%. The Australian three-year government bond yield has fallen to 4.35%. The US dollar, it's risen for a fourth straight session against the yen ahead of Japan's elections on expectations of increased fiscal and defence spending there. The Aussie is trading at 70 US cents. Well, oil prices have surged on reports that talks between the United States and Iran are likely to collapse. The US has rejected Iran's request to change the location of talks planned for Friday. Brent futures rising more than 3% to $69 a barrel. Gold has slipped as the US dollar strengthened and investors took profits after recent gains. Spot gold trading at around $4,930 an ounce, while silver is up close to 3% and copper's tumbled 4%. Iron ore up around 1% to 104 US a tonne. And Bitcoin, it's continued its fall there, now below 73,000 US dollars. All right, let's get across all those market moves. Ira Epstein joining us from Lynn & Associates. Ira, welcome back. What is going on with tech? So investors are nerved about particularly those legacy software makers. How are you seeing this play out?
Well, let's take the beginning of the year, period. We walked into a year where we had a parabolic move in metals. That move ended. The metal markets corrected between 20 and 30% on average. And now they're trying to get their feet under them again. We now are at the point in time where the market I don't think Anthropic's announcement that it was going to have a module that worked in the legal field to hurt software companies was really what's going on. I think it's that software companies are under the threat from AI, period. But if I'm right, you will always need software that works with AI to make things more efficient. I haven't yet seen any of the AI programs, and I use them, that replaces the software itself. So there is a distinction between the two, and I think the market may be getting that a little bit wrong. In fact, if you look at the spread between semis and software companies, they're going completely like this. There might be a point right here where you start nibbling and thinking they're going to come back together a little bit. Then what we have in the world is Iran. And I heard you just say that the meeting is off. I have just read in the past 20 minutes that the meeting is on and that the U.S. will meet in Oman, but I know as much as you do. Here's what I believe. I believe that if Iran isn't careful, what happens is the U.S. could attack. I think that every country in the Mideast is trying to stop the U.S. from attacking. I think that Iran comes to the realization that it has to give up nuclear production. Will it? Don't know. Will they give up missile production? I seriously doubt it. That's their line in the sand because they, in their twisted way of looking at things, think Israel is the aggressor. They're not in the region. Will they try to quell the public? Well, they've done that. You know, you're not hearing that the riots in the streets are going on. We don't have accurate numbers in the West as to how many people are in jail or how many were killed. So this is the weekend where people are going to probably want to own calls in gold, calls in the energy markets, because the one thing that we saw was a message from Iran yesterday. They didn't just go after a U.S. vessel in the Strait of Hormuz. They sent a message. This is the problem we can create. When they sent the drone up to look at the aircraft carrier fleet, they have other ways of doing that. They didn't have to do it, but they wanted to send a message. These are the things we can send at you. So everybody's posturing, and how the posturing ends up this weekend, I don't know. The best outcome I think that the U.S. could hope for is that Iran in some manner agrees to give up nuclear enrichment. I don't think we make any headway on missiles, and I don't think we make any headway in the United States on stopping them from funding insurgents in the area. I think you have to be realistic with what you can get. And that's about it. But you have a loaded gun going into the weekend, and you've got to take it very seriously.
Well, that all said then, Ira, let's go to precious metals. Those market moves, yes, given since we spoke a week ago, of course, how dramatic have those moves been? You call it. What would you be doing now in that space?
I think that the metal that you'd want to own is gold. I think that the market has corrected 20%, and I think that at this point, it's the one, if you want to own a metal, that you have to own. I don't think I would use futures. I think I would limit my risk if I were you to call options because you can sleep at night. There is no way to control the risk in the futures at this point in time because they can go anywhere for any amount. And as you're seeing, just what I've been telling you, not just last week, but the weeks before, I said parabolic moves never end pretty. And I've been doing futures since '69 as a broker. So it's not my first rodeo, and you have to be careful. Does that mean you can't be in and out during the day and trading them? No. Does it mean it doesn't belong in your portfolio? No. But trying to make copper for example, like a gold, it isn't. It got pulled along for the ride. And if you look at today, you were down 23 cents in copper and you were up pretty good in the gold market. That isn't how it's going to work. But what market would benefit if something goes wrong in the Mideast? Gold and crude. What markets will get hurt if all of a sudden we say there's a nuclear deal? Well, certainly crude, because one of the things that Iran would demand is that their oil no longer be sanctioned. And then the gold, because if you bought that as a hedge against something bad happening off of the U.S. and Iran, that would give that up. The other metals wouldn't be hurt as much, in my opinion. That's your gamble.
Ira, let's just return to where we began in tech. Now, of course, Alphabet reporting after the bell. The capex there is something else, isn't it? I mean, way ahead of what was
they don't
forecast.
Stop.
Yeah. Do you think
they look at it one way?
Yeah. Do you think that is it justified? And of course, for investors, the question is, where's the return on equity?
There is no return on equity right now. So if you're buying these companies, you are all at one side of it at this point. That is, how much can you spend and can you get the money back? That is facing all the companies. But the big boys are saying we can get it back. The smarter boys, like Apple, in my opinion, are saying we'll let you make the bets. We'd rather license from you whatever the AI can do. And that becomes the game. Which one of those parts win? There will be winners on both sides of that bet, but not everybody can win in this. I hope you see that. And you're seeing how the market crumbles very quickly. What markets are getting hit the worst right now? AMD. What was wrong with their numbers? Absolutely nothing. Not a darn thing. When you look at the memory chip makers, why are they getting hit? You can't even get your orders in for them, yet they're getting hit. So you have to pay attention to what's in, what's out at any point in time, and there'll be an opportunity to pick things up as bargain prices. Microsoft. I would have thought Microsoft would have been a big winner in AI. Think of all the products. Who doesn't use a Microsoft product, be it Word, Excel, your operating system if you've got a PC? And yet, look at what the stock is doing. Is it down 25% already in no time at all? This is what is going on. The rewards aren't there. The penalty box is there if you increase your spending and you're not showing each quarter, not year, each quarter, that you're able to make up a big chunk of what you're spending. And that's what the market is right now punishing the market for.
All right. Good to get across those market moves. Thanks for joining us from Linen Associates.
Thanks for having me.
Let's turn our attention to the open here. We are expecting a lower start. S&P ASX futures there. They off more than 0.1%. And, there's not a lot of companies out today. We do have Beach Energy. It's already reported. We'll get across that detail. Also some trade data to get our heads around as well, but very much a focus still on tech, given what we've just spoken about there on Wall Street and how that's impacted the local tech sector, with many of those quality tech names here having been severely punished. We'll get some analysis on that as well. Join us in just a moment for the Open.